afternoon, man.
Great. Thank you for having me, Karim. Pleasure to be here.
Hello and welcome to Coffee and Conversation. I'm your host, Karim RAFFA, and I'm joined today with Nikhilesh, co-founder and CEO of Validus Capital. So we said turning bridge loans into asset classes. What exactly is your process from underwriting all the way through?
Lending traditionally has been catch a customer, bring them on board, and then let's start to dig deeper beneath the layers and underwrite them. We kind of flipped it on its head, saying, why don't we first underwrite all the customer universe and then reach out proactively only to the ones that we want to lend to? And that's why we said, in each of our countries, let's understand which are the bellwether sectors. You know, in Singapore, there are a lot of sectors which are huge, big contributors to the economy. This could be industrial construction, these could be shipyards, marine, IT, etc. In Indonesia, natural resources is very big. In Vietnam, agriculture is very big. We went to some of the largest corporations in these businesses and said, look, we will partner with you to make sure that your SME supply chain is very well financed, because your supply chain is only as strong as the weakest link. In return, why don't you give us data on that supply chain? And this is deep down data as to what is the level of transactions, what is each SME doing, and then our data sciences team, and we've built a pretty solid team over the last few years, digs deep into it using our proprietary algos and creates a list of SMEs, which generally has close to 90% approval rates, saying these are the guys I want to lend to, this is the limit and the pricing for each, and these are the structures. Post which we reach out to that entire pool of SMEs saying, hey SME, Validus is here with this large corporate to make sure you're funded adequately. This is your transparent pricing. These are your limits. If you need the money, all you need to do is log into my website, submit the documents, and you can draw down the money within 2 days. And I think that has worked very well for us, because we are not trying to enter into any kind of a gouging price mechanism with the SME. It's very transparent. They know exactly what they're getting into. And most importantly, it's a product built for the SMEs, right? It's pay per use. You pay only for as long as you use the money.
It definitely is more of a humane way, I guess, of dealing with SMEs that are in need for cash.
Yes, I think, the whole flavor around internet businesses in the world is disintermediation, which is cutting out the middleman, making everything transparent and giving everybody a choice, right? I think if you ask me what's been the biggest word over the last decade or two, it's choice, whether it's financial services, media, retail, we want a lot more choice. And that's what we've done. We've given a choice to the investors saying, do you like this asset class? Within the asset class, what kind of loans do you want to pick? We give a choice to the SME saying, look, whenever you need the money, it's there for you. We're not really locking you in for a 5-year relationship. You can walk in, walk out. And the same goes for the large corporate, saying that, look, there's a choice, saying you can bring us in to help the SMEs.
It's almost vertical integration when you think about it, but from the financial side, the big corporate gives you access to their supply chain, and then you tie in the supply chain, so to speak, by helping them.
Absolutely, because over time you realize that for an SME, a lot of the data that you get from the SME is not really trustworthy, but supply chain financing data doesn't lie, right? Because this is what is being bought every month, this is what is being sold, supplied and paid for every month. We use that data as a holy grail, built algorithms and credit assessment methods around it, and just do lending off it.
So you're a startup, but you also help SMEs grow. Now, who's helping you grow? What's your investor base? How are you backed?
I think we've been really lucky. As we've grown, we have always managed to fortuitously find a great set of investors to back us. Our first investor was Vertex Ventures, which is the VC arm of Temasek Holdings in Singapore. They've almost been like a guardian angel to our company, help us navigate the Singapore ecosystem and grow regionally. Post which we've added a whole host of institutional investors to our own cap table. I think traditionally we've shied away from pure play venture capital funds, but gone to investors who add value beyond just that initial check size. We've got some marquee names, including FMO, which is a development financial institution under the aegis of the government of Netherlands. We have Open Space Ventures, who were one of the first investors in Gojek. We've recently added Vertex Growth Fund and the Kwok family, the latter being one of the premier families in Malaysia. We also have marquee regional names. We have Adventures, which is the in-house corporate venture arm of Siam Cement Group from Thailand, and Vina Capital Ventures, one of the largest asset managers in Vietnam.
Have you currently raised anything, or are you looking to raise?
Yes, I think with the onset of COVID, it became important for every startup to make sure that they have enough dry powder to kind of ride this wave through. We just closed a fundraising round of close to 14-15 million US from the names that I just mentioned, which puts us in good stead for at least the next couple of years.
So I understand you've recently secured funding, but can you tell me what it looks like after all of this? Are you looking at geographical expansion, a large exit, an IPO? What's the long-term plan?
Before Validus, I spent all my life doing private equity and M&A. I've seen a lot of investments and exits. I honestly believe that an exit is just a happy outcome for a successful business. I think while we have a good track record, we have some wind beneath our wings. There is a long way to go, and we just want to build a truly successful business with a strong legacy. We now have a footprint in 4 markets. So first we want to dig deep and really build a solid base. As much as we like to kind of settle on our laurels, we still talk millions, but the financial services industry globally, talks in billions. So there's a lot of room to grow what we are doing. The overall SME lending gap is anywhere between $20 to $100 billion in every single ASEAN market. So there's a lot of room for us to grow. After adding the 4 countries, there are still a couple more within ASEAN that we could set our sights upon. So yeah, I think it's grow vertically, grow horizontally, and if all done well, then yeah, I'm sure there'll be a lot of exit options coming along the way.
Before we wrap up, can you tell me what the competition and just generally the marketplace looks like for a company similar to yours? I'm sure there are other providers out there.
Oh yes, this is something that we've spoken about a lot and gets written about a lot. If you look at our industry, we're a marketplace, which means just by virtue of being doing what we do, there is very little barrier to entry. After this conversation, you can set up your own marketplace, find somebody to borrow, somebody to lend, and bang, you're in business. But what people often don't realize is that there is a huge barrier to scale. And that barrier to scale is credibility. Because as the industry grows, it gets recognized as a mainstream industry. The bar keeps rising because regulations come in. As you step into institutions and try and scale the business, life gets harder and people start looking under the hood and asking a lot more questions. And we honestly like that. I think when we started the business in Singapore, at a certain point of time, there were a dozen or so competitors or players like us. And then there were, the quasi-FIs and banks. I think today that landscape within marketplace lending has narrowed down to maybe just 2 or 3 players. Institutions used to look at us warily, are now reaching out saying, hey, maybe why don't we partner together? So, I think to summarize, we do see ourselves getting a lot of mainstream attention and hopefully integrating and partnering with existing financial institutions to together plug in the gaps which exist in the economy.
Yeah, there's definitely a lot of opportunity to grow, I guess. After that big filter, right, from 12 down to 2, you ended up with SME lending on one side, peer-to-peer lending, and then marketplace lending, right?
Absolutely. So we are very clearly marketplace lenders. The regulations are also becoming a lot more interesting. We see ourselves as growing from just providers of credit to an institutional asset class, maybe graduating on to becoming pure play digital lenders, digital banks. I mean, who knows what's out there in an exciting future.
Exciting indeed. Nikhilesh, thank you so much for coming on air today.
Thank you for having me. It was a pleasure speaking.
It's been great.
Thank you.
Thank you all for watching. It's Coffee and Conversation. We'll see you soon.